All right, let's dive into one of the biggest stories in tech right now, the multi-trillion-dollar war for AI dominance. This is a real high-stakes showdown between two absolute giants, Nvidia and AMD. To really get a sense of just how massive this fight is, you have to start with this one number, $4.76 trillion. That's the mind-boggling market cap of the current king of AI chips, Nvidia. I mean, that figure just dwarfs almost the entire tech industry. And that, of course, leads you to the big question, right? How in the world did one company get to be so powerful? Maybe more importantly, is there anyone out there, any challenger, who has a real shot at closing that gap? This table really puts it all into perspective. Look at this. Nvidia isn't just leading its direct competitors, it's bigger than Microsoft, bigger than Google. And then you scroll way, way down to number 10, and there's our challenger, AMD. That enormous gap between number 1 and number 10, well, that's what this story is all about. So yeah, this really is a tale of two chips. It's the classic David versus Goliath setup, you know? A true clash of titans in the tech world. You've got the established champion that seems completely unbeatable, and then you have the scrappy, hungry underdog. So let's just be super clear about who's who in this fight. On one side, you have Nvidia, the titan. They are the dominant leader that literally everyone is trying to chase down. And on the other side, you've got AMD, the challenger. Yeah, they're much smaller, but they're growing like crazy and starting to land some huge customers. And this number just perfectly captures that gap, 12 times. The market has basically decided that Nvidia is worth 12 AMDs. And here's the really fascinating part. This isn't just some random number. It almost perfectly tracks with the difference in their revenue from the most critical battlefield for AI, the data center. So let's pop the hood and get into the battle of the metrics. We're going to take a much closer look at the key numbers that really define this rivalry and see what's actually fueling these wild valuations. Now, this table is super interesting because it tells two totally different stories at the same time. Check out AMD's data center revenue growth, an absolutely insane 172%. But then, look over at Nvidia's gross margin, a rock-solid 75%. See? They're playing different games. AMD is all in on growth, while Nvidia is focused on pure, unadulterated profit. This chart right here, this is AMD's primary weapon. That massive bar at 172% shows you just how fast they are charging into the AI data center space. Now, don't get me wrong, Nvidia's 68% is amazing for a company its size, but AMD is just on another level of acceleration. This is their whole strategy. But like we said, growth is only half the story. Profitability? That's Nvidia's superpower. For every single dollar of hardware they sell, they get to keep 75 cents in gross profit. It's just incredible. That margin gives them a gigantic war chest to pour back into R&D and stay on top. It's the financial engine that keeps the king on the throne. Okay, now here's where things get a little weird and kind of counterintuitive. There's this metric called the PEG ratio, which helps us see if a stock's price makes sense given its growth. And here's the paradox. Even with its astronomical price tag, Nvidia's PEG ratio is way lower than AMD's. So what does that mean? It means when you factor in its colossal earnings growth, the market actually sees the titan, Nvidia, as the better value right now. Crazy, right? So let's move past the raw numbers and see how this all translates into strategy. How are these companies actually fighting this war? For Nvidia, it's all about defending a deep, powerful moat they've built over decades. For AMD, it's about landing huge, game-changing deals. And here it is. This is AMD's biggest knockout punch to date, a massive $60 billion deal with Meta. Now, this is more than just a big sale. This is validation. It proves that AMD is a real, credible second option for the biggest AI companies on the planet, all of whom are terrified of depending on just one supplier. And it's not a fluke. This came right after a similar huge commitment from OpenAI. And hey, don't just take my word for it. Look at what the analysts are saying. Bank of America is calling this a structural shift in the market. That means the biggest buyers are fundamentally changing how they buy the chips that power AI, and AMD is standing right there, ready to catch the business. So how does Nvidia defend its kingdom? With its ultimate weapon, the CUDA software platform. They launched this thing way back in 2006, and over the years, it's become the default language for programming AI. Millions of developers know it, use it, and are basically locked into it. Big companies will gladly pay a huge premium for a system that just works flawlessly, and that is exactly what CUDA is. But what about the actual hardware, the silicon itself? Well, that gap is closing fast. While Nvidia's rack still has the edge in raw computing power, look at this. AMD's new rack actually beats it on memory capacity and memory bandwidth. So on paper, this race has never, ever been closer. Of course, this isn't happening in a vacuum. It's not just a two-horse race. Both of these companies have to navigate a really complex global market, and there are some pretty significant risks on the horizon that could throw a wrench in the works for both of them. Yeah, they're both facing some serious headwinds. You've got escalating export controls to China, which could cost them billions in sales. You have the risk of higher interest rates, which could hurt their stock prices. And maybe the biggest threat of all, their own customers, Google, Amazon, Microsoft, are all trying to build their own AI chips. That could shrink the whole pie for everybody. And on top of all that, they each have their own unique problems. For Nvidia, it's the crushing weight of sky-high expectations. I mean, at a $4.6 trillion valuation, they have to be absolutely perfect just to stay where they are. For AMD, the challenge is different. They have to prove their new chips can actually compete at a massive scale. And they have to deal with the fact that those big deals could dilute their stock by about 20%. So where does all this leave us? What's the final verdict? We've looked at the numbers, the strategies, the risks, and it all seems to boil down to two very different paths, and one big question you have to ask yourself. So here's the bottom line. The choice is actually pretty clear. You go with Nvidia if you want the dominant, incredibly profitable market leader with that powerful software moat. Or you go with AMD if you believe there's plenty of room for a strong number two and you want to get in on that explosive early-stage growth potential. Or maybe you don't have to choose. There's another strategy that's pretty popular, which is a more diversified approach. It suggests a portfolio weighted 2-to-1 in favor of Nvidia. That way, Nvidia is your stable core holding, and AMD acts as your high-growth kicker, letting you play both sides of this amazing story. And that leaves us with one final thought to chew on. We're in the middle of a massive AI gold rush, where everybody is trying to strike it rich. In a situation like that, maybe, just maybe, the biggest risk you can take is betting all your money on only one shovel.